There's a government tax relief scheme that could put thousands of pounds back into your orchestral productions. And fittingly, it's called Orchestra Tax Relief, or OTR. And today I'm going to walk you through exactly what it is, who can claim it, and how it works. Orchestra Tax Relief was introduced in 2017 to support the homegrown arts in the UK. If your company produces qualifying orchestral concerts, you can claim back a proportion of your production costs, either as a reduction in your corporation tax bill or as a cash credit paid directly to you. So, who's eligible? You need to be what's called the Orchestra Production Company, or OPC. That means your company must be registered in the UK for corporation tax, and you must be actively responsible for the production from start to finish. We're talking planning, decision making, hiring of performers, paying for goods and services. You need to be genuinely hands-on with this and have creative control of the project. For the production itself to qualify, it needs to have at least 12 instrumentalists, with the majority of instruments being unamplified. And those musicians must be the main event, not a backing act, but the main focus of the performance. The performance needs to be ticketed and open to the paying general public, or put on for educational purposes, and at least 10% of your core costs need to be UK-based expenditure. And now for the bit everyone wants to know. What is it actually worth? You can claim up to 80% of your core production costs. If your company is profit-making, that additional deduction reduces your corporation tax liability. A benefit essentially worth up to 20% of your costs. The exciting bit though is if your company is making a loss after deduction, you can surrender that loss for cash. From April 2025, that credit is worth 45% of the surrendered loss, meaning the overall benefit can be as high as 36% of your eligible costs. So, what can you actually claim on? The key is understanding what counts as core cost. These are the costs of producing the show, not developing the idea, and not running the actual performance once it's open. Think hiring musicians, rehearsals, production meeting, venue preparation, travel to unusual venues, and music rights. And once the curtain goes up for the first time, those ongoing running costs, so salaries, venue fees, maintenance, are no longer eligible. Location matters too. Only costs for goods and services consumed within the UK count towards your claim. OTR is claimed for your corporation tax return, the CT600. Each production must be treated as a separate trade with its own profit and loss account. From April 2024, every claim needs to be accompanied by an additional information form, which must be submitted to HMRC before your tax return. You have up to 2 years from the end of your accounting period to make a claim, and you can claim year on year as costs build up rather than waiting until the end of production is completed. HMRC compliance checks are on the rise, so good record keeping is essential. Keep contracts, invoices, timesheets, internal correspondences, anything that shows your active involvement in the production and backs up the costs that you're claiming for. You can read all the details in our blog.